Alrighty, guys. So the stock market's looking a little bit rough today. Actually, more than just a little bit rough. After we got some earnings from JP Morgan, Wells Fargo, BlackRock, State Street, which, by the way, we're going to break all of those down in this video. So check it out. We have the S&P 500 down 1.5% right now. Same with the Russell. The NASDAQ is leading the losses, down 1.7%. And we have the Dow down 1.2%. And get this, guys, the VIX is up over 25% on the day. I can't even say that with a straight face. That's unbelievable. The VIX is up over 25% on the day. It's at 18.6 right now. So pushing 20 points on the VIX, which we haven't done that in quite some time. We're talking months, guys. The last time we were over 20 on the VIX was back in the end of October. So what? We're talking 5 months ago. Actually, no, 6 months ago. So it's been a while since we've seen this type of volatility. And we have the metals up, gold's up 0.6%, and we have silver up 0.8%. So we are seeing a bit of a flight to safety right now into the metals as we have crude oil. Let me pull that up and see, guys. Oil is up over 1% on the day. And in my opinion, guys, oil is going higher as we're getting into the summer months here. And I've been long XLE on a little side note here, guys, which is an energy ETF for quite some time. And this has been doing very well. Do you guys remember I was talking about XLE in the high 70s, 80s? I was buying it up in the 80s, and I held it for years, guys. I've been in this stock or ETF, excuse me, and now it's really starting to take off. And I feel like, in my opinion, we're going over $100 a share on XLE. I could be wrong, not financial advice, but that's where this looks like it's trending. So we are seeing a lot of red today, a lot of volatility, flight to safety, oil's moving up. Let's quickly break down these indexes before we go over these financial companies that reported. So SPY's down 1.4% right now. Clearly, we're under the moving averages, both moving averages here on the 4-hour chart, and now we're actually taking out the lows from the last couple of weeks. Let me actually show you guys here. On the 5-day, we're at a low. On the 10-day chart, we're at a low, clearly, right? On the 1-hour chart, if I pull it up, you guys can see, we're pushing the lows here at 508, which we hit on the 15th of March, pretty much a month ago, right? So SPY's pushing 1-month lows here, you guys can see, and Triple Q probably doing the same. Pretty close. Yeah, we're at 437 now. The 1-month low is at 432 pretty much. So we're a couple bucks away from that, as Triple Q again is down 1.7% on the day, leading the losses as big tech is not looking so pretty right now, guys. We have stocks like, let's see, what are some big tech names moving down today? Adobe's down 3%, Nvidia's down 2.3%, Tesla's down 2%, Amazon's down 2%, Meta's down 1.8%, and the list goes on, guys. But it looks like Apple's actually flat, slightly green, which is interesting. On a 25% up day for the VIX, we have Apple in the green. What a beast Apple is, guys. That essentially shows me, or tells me, guys, that Apple is so beaten down, it doesn't want to get beaten down even more unless we get a crazy stock market crash, which we're not necessarily seeing that today. So that could mean maybe this is the bottom for Apple, potentially. I don't know. I mean, look, we are breaking out of the 180 SMA and the 50 SMA for the first time above those moving averages. Both of them in quite some time, a couple of months here. So keep your eyes on Apple, and earnings are coming up fairly soon here. It looks like on the 2nd of May, which is about 3 weeks away from now. So Apple's looking pretty interesting, guys. And yeah, enough of that, enough of the indexes. Let's break down these financials, starting off with JP Morgan, which is down 5.7% on the day. The stock's in complete free fall mode on the 4-hour chart. Now we're down $17 from the $201 all-time high, or about 9%. So essentially, guys, JP Morgan is almost in correction territory. It's on the cusp of correction territory. So JPM, they ended up reporting, let me see here, guys, adjusted EPS for Q1 2024 of $4.63, which beat the $4.15, and sales also beat $49.1 billion versus $41.84 billion expected. So a nice double beat there from JP Morgan. And I was reading earlier a couple articles through the earnings. I think their interest income guidance was a bit off, not as good as expected. Net interest income guidance, so that could be a reason for the sell-off. And to be honest, another reason why is because maybe the stock just got way too far ahead of itself. It was at all-time highs. We were already drifting down heading into earnings, and maybe earnings just weren't as great as expected, guys. This happens, and now we're seeing a bit of a sell-off, and guess what? JP Morgan is still holding an uptrend even though we're under both moving averages here, and it's looking like we're a falling knife right now. So let's see if we can recover, maybe see some, consolidation, maybe the dust starting to settle in the 180s, low mid 180s here. Let's see, or maybe we continue to drift into the 170s, guys, which might not be the best for the bulls in the short term, but that could be opening up an opportunity if you're not already in the stock. Potentially. Not financial advice. Do your own research. Trade at your own risk, guys. But yeah, JP Morgan down almost 6% on the day. Probably the biggest red day that we've seen, at least on this time frame. So in the past many months here. And on the 1-year chart, yeah, probably the biggest red day that we can see here. I mean, look, guys, look at this gap. Look at this huge gap down that JPM saw. So keep your eyes on that one. We also had Wells Fargo report. I'm pretty sure their stock is unchanged, or at least it was last I checked. Let's pull it up here. WFC is the ticker. Come on, there we go. So now it's down about 0.25%. So Wells Fargo reported, let me see here, guys. Looks like they ended up doing EPS adjusted of $1.20 versus $1.09 expected. Sales $20.86 billion versus $20.2 billion expected. So they beat EPS and they beat on revenue. Let me see here. It looks like they repurchased 112 million shares for $6.1 billion in the quarter. Anything here on guidance? Not really seeing anything here on guidance, but yeah, not too bad of a double beat there for Wells Fargo. Looks like Wells Fargo CEO says we continue to execute on our efficiency initiatives, including reducing headcounts. We expect to repurchase more common stock this year than we did in 2023, yada, yada, yada. So, yeah, keep your eyes on WFC, guys, as overall, this stock has been crushing it. I mean, look, it was at $38 back in October. Now we're at $56. We're right by the 180 SMA. This is actually holding above that moving average, unlike JPM, which we saw is in complete free fall. But both of them are still overall in uptrends, right? So keep your eyes on those two big dogs. Of course, we have Bank of America next week, I believe. Yeah, it looks like it's on the 16th of April. So in a couple of days, we have BAC. So keep your eyes on them. And today we had BLK, which is BlackRock, and their stock's down 2% so far on the day. It looks like the company reported adjusted EPS of $9.81, which beat the $9.32 expected, and sales also beat $4.73 billion versus $4.68 billion expected. So double beat for BlackRock. And let me see here. It looks like Q1 end assets under management, $10.5 trillion, guys. Yeah, with a T, $10.5 trillion assets under management for BlackRock, and their net flows were $57.18 billion, and their adjusted operating margin was 42.2%, which is pretty good. UBS maintains neutral on BlackRock, raises price target to $850 per share. So yeah, this is one worth watching. We are down about 80-ish, 70, 80 bucks per share from the recent highs, or about 9%. So we're almost in correction territory, on the cusp here on BLK. So keep your eyes on it. And STT, State Street, is another one which they just reported. Their stock's down barely, about 0.25% here. So it looks like State Street reported adjusted EPS of $1.65 versus $1.50 expected. Total revenue $3.13 billion versus $3.06 billion expected. So double beat there for State Street. Anything else? Not really seeing anything else. But yeah, fee revenue lifts the top line, it seems like, which is good. Revenue increase, yada, yada, yada. All right, so STT, guys, is down a good chunk. It looks like about $5-6 over the past couple of days per share, but it's also down about, I'd say, $7-8 over the past couple of months from that $80 high that we hit in the middle of January. So this chart's looking a bit wonky, but overall it could be a cup and handle in the making. We are still technically holding higher lows, more of a, resistance at about 78, 80 bucks. So this could be one that is worth watching. It is, in my opinion. This could be in play, maybe up to 80 bucks per share. Keep your eyes on it. So yeah, guys, what do you think? Let me know your thoughts in the comments. Hit the like button. And if you want to keep up with my charts throughout the day, you want to be in the Discord chat, and you want to see me build my private Patreon portfolio, which I've been doing that for quite some time now, check out the Patreon link down below, or go to stocksurfast.com/Patreon, or just simply use the QR code right here. And if you guys want 7 fractional shares from Moomoo of the Mag 7 stocks, check out the link right here as well, or go to stocksurfast.com/Moomoo, or use the QR code. Once you open up your account and fund it with at least $100, you get your 7 fractional shares of the Mag 7 stock. So use those links down below, guys. And with that being said, cheers. I'll catch you guys later.